The crypto market just got a big boob warning, and I'm not talking about boobs found on here. I'm talking about this boob right here. The information that he has comes from two big pieces that I need to share with you. He's telling everyone to get out of crypto. And Genesis DCG are in trouble as we've got some investigations happening regarding how they moved money back and forth between each other. So now let's learn about boobs.
And a public service announcement quickly from me to you. If you don't mind hitting that like button, maybe subscribe, maybe comment down below to help the algorithms, because I guarantee you YouTube's new family-friendly policies are not going to push this, especially with all the boob talk.
The heat map's looking more green than I've seen in the last few weeks, but don't get your hopes up yet as we have a big event coming up in the next 4 days. XRP sitting at 33.9. We've got Ethereum sitting at 12.64, Bitcoin approaching 17,000. But why am I telling everyone to be a little cautious? And this kind of ties in with the Cramer story. First of all, here's why. January 12th, 8:30 a.m. CPI data. I showed you all earlier in another video how CPI data is the biggest factor regarding price for crypto out there. I specifically broke it down with XLM and XRP. I'll have that video linked at the end. To give you an idea of what we're looking for, we've got 7.1 as the past month, with the previous month before that sitting at 7.7. What we're looking for right now is an expectation of 6.5. If the markets can be at 6.5 or less, that'll mean Jerome Powell and the Fed won't have to be so aggressive with their rate hikes. That's part of the warning that Jim Cramer is saying, going, hey, if the Fed has to keep jacking up rates, the cost of doing business is gonna be more. Why? Home equity loans, home loans, car loans, business loans, credit cards, all that kind of stuff is tied to CPI data, which is used by the Fed to determine rate hikes, everyone. But now on to the stories. All right, Digital Currency Group under investigation by U.S. authorities report. The authorities are digging into internal transfers between DCG and its subsidiary crypto lending firm Genesis. Prosecutors have already requested interviews and documents from both companies, while the SEC is running an early-stage similar inquiry. As of yet, no indictment has been brought against DCG, nor have both U.S. authorities provided any information about the case. Now remember, this is very similar sounding to what happened between FTX and Alameda. That's why they went after Gary Huang from FTX and Caroline Ellison, who doesn't work for this company right here, because they are able to corroborate the story of how they were able to move funds between the two. Similar situation here as both entities are being looked at and how they're moving money back and forth between them. And now onto the Cramer thing, and I want you to keep this one phrase in mind as I read the story, and I'm going to kind of keep saying it over and over. Remember the author. Jim Cramer expects the SEC to do a roundup of uncompliant crypto firms, urges investors to get out of crypto. Specifically, what he's talking about is this right here. We had a multitude of federal regulators out there issue a warning specific to the crypto industry. And I've got it right here because, as always, any article you see in this video will be linked in the description below. They're citing a whole bunch of things as everything from fraud, volatility, susceptibility of stablecoins. That's right, Justin Sun. Your USDD is depegged, and maybe you should work here and show us how to peg. We have risk management issues as well as heightened risks associated with open, public, and or decentralized networks as well. So Jim Cramer is using this paper, which came out from the FDIC, the Office of the Comptroller of Security, and the Federal Deposit Insurance Corporation for his ammunition for going after crypto yet again. And remember when I said remember the author, I want you to think of this principle. Let's just pretend that there's $1 trillion in crypto. Well, crypto's an investment tool, isn't it, right? As well as, usage and utility. But think about that. If there's $1 trillion in crypto, where does that mean there's not $1 trillion? In the stock market, everyone. That's right. The stock market has seen some outflows as people have left the stock markets and gone to the crypto markets over the last few years. So since Cramer's a big stock boy right there, yes, boob everyone, that means he's upset that money is leaving the stock markets and going to crypto, which directly affects what he holds and what all of his cohorts hold, as well as his sponsors. Interesting, isn't it, everyone? So like I said, remember the author, because the reason he's throwing shade at crypto has to do with, yes, this joint statement. It also has to do with the fact that he's big into stocks and money is going into crypto, not stocks. So think every dollar in crypto is a dollar that's not in the stock market. He said specifically this, citing John Stark, who served an attorney for over 18 years in the SEC's enforcement division. Cramer stressed that Stark is now calling for a sweep, the Mad Money host emphasized. He said the SEC is going to sweep everything, which is why I'm telling everyone to get out of crypto. I see a lot of people feel like John Stark that it's just a giant scam, Cramer continued. He added that he expects former FTX CEO Sam Bankman-Fried to be the material to the SEC roundup, essentially saying that the bad actors, your Mashinskis, Do Kwons, Justin Sun did a story about him, CZ from Binance, him as well, that those bad actors are the reason why you're going to see further sweeping regulations and the SEC just kneecapping crypto companies out there. What really bothers me about this is there's two big factions of crypto. The first is you've got the people that believe in the utility part of it, right? What crypto and Web3 can do for you. I just did a story recently about how Lowe's is going to be using Web3 technology to prevent theft and to make the customer shopping experience, well, more enjoyable. That's a good use case. But the speculators, the people that are over leveraged, your Do Kwons, your all those Mashinsky characters, SBFs and all that, they're the ones that are doing the main damage to crypto. Most of these programs out there are definitely Ponzi schemes. Justin Sun's Huobi, think about that. He just had to put in $100 million of his own money into the exchange. He said, though, that the reason he put his own money in there is because he said, this shows you how much trust I have on the protocol. Liar, liar, pants on fire. The reason he put the $100 million in is because there's so many people withdrawing money out of there because they know that exchange is going to flop. Worst part is Huobi laid off a bunch of their staff, and they said this, hey, if you want to keep working for us, we're not going to pay you in fiat. We're going to pay you in stable coins because they don't have the cash. So yes, I agree with Cramer with the idea that we need to get the bad actors out there. But calling for a sweep to sell everything in crypto is the wrong way to do it. That would be like me saying, hey, remember that Theranos lady that talked with the weird accent? Because of her, sell everything in the stock market. Makes no sense. He's just doing it for views. And remember the phrase, remember the author, because the author in that case is big into stocks, and for every dollar that's into crypto, well, it means it's not into stocks. And that's why he's pissed, everyone. Now, I said earlier about that story regarding the effect of CPI data on the price of XLM and XRP. Boom, that's this video right here. Sorry, ladies and gents, there won't be any videos regarding boobs in this one. Until more news breaks, I'll be sure to share it with you. Until then, you cool cats, have a great rest of your day.